Hello and welcome to Vox Markets. I'm John Human and I'm joined today by Tom Bailey at HANetf to talk through their latest research into thematic investing. How are you doing, Tom?
Good, thanks.
Excellent. So it's a fantastic piece of research, covers an enormous amount of ground. But before we look into that, tell us a bit about HANetf, what it does and what you do there.
Yeah, sure. So HANetf was founded in 2017 by Hector McNeil and Nick Biankowski, two veterans of the ETF industry. And so we listed our first ETFs just over 4 years ago. This is the EMQQ Emerging Market Tech ETF, and iTech, our Tech Megatrend ETF, and Sky, our Cloud Tech ETF. Since then, we've continued to grow, listed more ETFs. We've got around 20 thematic UCITS ETFs, and also a range of ETCs, tracking stuff like gold or EU carbon allowances, and a bit more niche in the cryptocurrency space as well. So I'm head of content and research here at HANetf, and so kind of the idea is that all our funds are created with external partners, and that means each ETF has an expert already associated with it. But kind of the role internally at the in-house ETF then is to try and kind of synthesize that research into a broader story and arguments around both ETFs and thematic investing. And I think the kind of thematic review is a key example of that.
Okay, so with ETFs, obviously, we're all very familiar with what they allow investors to do, obviously tracking broad indices very cheaply, but you're doing something slightly different. As you've just mentioned, it's more thematic. So can you talk through what that means and why thematic investing is so important and why ETFs are perhaps the best way to play that approach?
Yeah, sure. So thematic investing is not in and of itself new. It's kind of been around in terms of kind of for investors since probably start of capital markets, and it's basically the idea of trying to capture the big kind of structural trends unfolding in the global economy, be it kind of economic, social, technological changes, and then obviously trying to kind of select securities to capture that trend and use the tailwinds from those trends. Kind of one way we've got to think about it is so you can kind of break down investing into two components. So the first part is basically you're trying to determine something that's supposedly misunderstood about the world, and the second part is trying to actually express it, right? So, for example, you may believe that maybe the market prices in the market don't fully reflect the actual role nuclear power might play in solving Europe or other parts of the world's energy crisis. Alternatively, you might think that even still investors are undercounting the potential of clean energy. But that's what obviously doing the first part, right? That's taking a view on the world. Then the question is how you implement this. So historically, obviously, people might go and say, looking that's a kind of top-down approach to investing. Then they're trying to determine securities within that, which would benefit. They might try and determine different companies. So if your view is obviously nuclear energy is going to play a larger role in the future, you might want to go and buy Cameco or another uranium miner. If you're anticipating a world powered by solar, you might go and buy something like First Solar or Sun Power. Or maybe a combination of several of these. But the kind of fundamental issue with this approach is that it basically exposes you to idiosyncratic risk of each stock. And obviously, if investors are trying to do a bottom-up approach in terms of looking at individual security, that's one thing. But if you're trying to do this top-down approach of looking at these big structural trends, then obviously you don't want to introduce idiosyncratic risk, right? You don't want to expose yourself to the risk of basically, you might be correct in your view on say the future of solar or uranium, but all companies in that space will necessarily see the kind of same returns, and there could be idiosyncratic risk. They could have a bad management, poor decision making, a whole host of issues. And so that's why kind of with the thematic approach, where you take a basket of stocks set to benefit, it gives you a much more diversified way. And we've seen over the last few years is the explosion of popularity of ETFs doing this stuff. Obviously, many of your listeners remember in the 1990s, there's lots of kind of tech actually managed thematic ETFs, but with the kind of obviously that was relying upon you get an expert fund manager who kind of has familiarity with a specific area and should construct a portfolio to gain from the theme. Whereas what we've seen really is the much more of an improvement in financial data, the growth of kind of these very niche thematic indices by index providers like Selective, which has really allows kind of this kind of explosion of different types of themes and to really drill into the data to actually capture and implement these themes.
So I mean, your range of ETFs, it allows you to invest in all sorts of things, on a very, very, very granular basis. What do you think the advantages are of being able to drill down, so far into these very, very specific trends?
Yeah, I mean, so it really depends on the investor and what they're trying to do. So I mean, a thematic ETF for an investor who kind of wants to use it as a stand-in for an individual stock, as I kind of explained, then obviously they want this kind of very concentrated pure play approach. So with something like our electric vehicle charging infrastructure ETF, it's only 12 stocks. It's very concentrated, and that obviously is standing for this theme, and investors would often end up using it in lieu of picking individual stocks. Others might want a less granular approach, and there's kind of much more broader thematic ones, and they might want to use thematic ETFs as a stand-in for their usual kind of growth building blocks in their portfolio. But another kind of thing you mentioned, kind of granularity, and I think this important is always has to kind of take into consideration is basically when investors come to thematic ETFs, the core thing they want or they don't want, right, is overlap with their existing holdings or correlation with basically the S&P 500 or MSCI World or some other kind of benchmark. So you've got to be conscious of that. So it's always kind of about trying to ensure that you're finding a thematic ETF, which is not just going to end up being a replication of a major index that's going to be different enough to justify the investor making this allocation. And there's kind of all different ways you can do it. And so just kind of put one example is our ETF FMQQ, which is Frontier and Emerging Market, E-commerce and Tech. And now this one actually, so we have an ETF called EMQQ, which is Emerging Market, E-commerce and Tech. That's about 40-50% China, right? FMQQ was the one we created this year, which basically just excluded China. And this is based on feedback from investors that basically they were interested in the theme of emerging market, e-commerce and tech, right? As a good way to kind of play emerging markets, but they already had lots of China exposure, a lot of the big kind of names in the kind of the Chinese part of the companies listed in China or based in China. They already had exposure to those other funds with individual stocks, the big names like Baidu, Tencent, Alibaba. And so that's kind of, with this in mind, they wanted to play the theme, but they didn't want to end up doubling up their exposure to China. Mm-hmm. So we created the FMQQ one, which is basically just kind of even more of a granular way to play that theme, accommodating different investors' portfolios.
Yeah, makes a lot of sense. So how do you? I mean, as we've said, you've got lots of different themes that you can play with your ETFs. How do you go about identifying the themes that you're going to build products out of that are most likely to resonate with investors?
Yeah, so I mean, so we work with third parties on each of our products. So often, so it's kind of they'll come to us with an idea, but obviously we won't just make any odd product. We want to make sure actually we do think this has legs as a theme and actually will have some longevity. So we're kind of one way to kind of think about kind of the strength of a theme is to break the economy down into three core components: consumers, businesses or corporations, and thirdly public policy. So obviously consumer spending is what people spend their money on. So for example, you can see all the stats and data about increased demand for electric vehicles, global sales of EVs doubling every few years or so. Likewise, you can see corporate business spending in the same space. So an example, obviously, in just to keep with the electric vehicle example, you see stuff like property companies signing agreements in terms of having for charging ports to be built, and also you can also see then with the same kind of electric vehicle theme, growth of government spending. So obviously the big one lately has been the Inflation Reduction Act in the US, and the money allocated towards subsidizing purchase of electric vehicles there. And so this kind of in a roundabout way, it's basically about trying to look at these three components of the economy, and if they're moving in the same direction, that kind of looks like a powerful tailwind. Now, obviously, sometimes they might only have two parts. And obviously, it all depends on kind of how strong you think. You could see you might be purely based on consumer growth. It might be a mix of two or three. But this kind of trying to think where money is flowing in the economy is, I think, a kind of a key way to determine how strong a theme looks.
Let's talk about the research, because I think one of the things you've found with this research, you've obviously gone out and done a lot of surveys and actually found what potential investors are interested in. So tell us about the research, what the aim was behind it, and how you put it together.
Yeah, sure. So our latest survey showed 80% of wealth managers said they plan to increase their thematic exposure over the next 12 months, while 74% reported an increased interest from their clients. So just to start, actually, perhaps we should just say this was 50 wealth managers from across the UK, Germany, and Italy. And so as I said, 80% reported kind of increased thematic exposure, plan to increase thematic exposure over the next 12 months. 74% reported increased client interest. And what we're trying to do here is also kind of track this interest over time. So as encouraging as numbers are, they actually were slightly lower than we previously did the survey. So previously 90% said they plan to increase thematic exposure, and 95% reported increased client interest. So it does seem that perhaps the kind of volatility markets over the last kind of year has maybe led to slight decrease in interest in thematic investing, although it still stays strong. And this is the kind of thing we want to do, is want to basically try and gauge the the ebbs and flows of the popularity of this approach. We kind of expect it to stay strong, but it's interesting to see how it's influenced and what it kind of how it changed over time. And also the other kind of part we want to do is look at actually who's interested in what. And so, we're kind of tracking different to see which of the major themes are attracting most interest or not from investors.
I was going to ask you, you one would assume that the popularity of different themes sort of changes over time. Tech was flavor of the month, a couple of years ago, not so much at the moment. So what were the big themes that emerged from this particular survey? And how has that changed, over the last, year or so?
Yeah, so I mean, the big thing really is energy, right? Yeah, I mean, we did do the survey a year ago, but I imagine if you did ask, tech would have been fairly high up there, I imagine, in terms of the popularity of themes. But obviously, this year has been all about energy. Obviously, you can't turn off the kind of news without seeing about the energy crisis, and obviously, this, it has ramifications too for investors. So, after the survey found 92% of the wealth managers expect to increase their exposure to clean energy themes. Partly, it's obviously this is kind of the current crisis in terms of the Russian invasion of Ukraine and what that means for energy markets, but then also the kind of more broader theme in terms of the idea that governments are still going to try to achieve net zero emission targets over the next few years, and so clean energy will play a crucial role in terms of our energy use. The other finding was 88% of those surveys had recently invested in nuclear energy or uranium-focused equities. So again, this is kind of sticking with the energy theme in terms of solutions to the current crisis in terms of Russian energy, and also the longer-term solution to trying to reduce greenhouse gas emissions. And this was given a real boost, I think, the nuclear energy part this year, with basically the EU voting to give uranium the label of a green energy source and kind of validating its role in the transition to net zero.
So, I mean, green energy is as you say, incredibly important and growing in sort of investor interest. You've got lots of different ways that you can approach playing that, getting exposure to that trend with your range of ETFs. Can you talk through perhaps some of the different products that you have that play this trend in different ways?
Yeah, sure. I mean, so yeah, there's so many different ways to kind of do ESG or sustainable investing. You've got the kind of exclusionary approaches. But we kind of really think the thematic investing approach to kind of identify top-down structural changes is very attractive, right? So you'd struggle to find a better example of a big structural trend in the global economy than basically a large chunk of the world's economy is committing to achieving some sort of decarbonization, right? This is kind of it's a huge theme, and so it's kind of to entail in various different ways expansion of renewable energy generation, electric vehicles. And so this is kind of a big overarching theme. And we have kind of have an ETF, which basically is our decarbonization enablers ETF, which CLMA is its ticker. And this basically tracks a basket of stocks, which are meant to be different parts of the economy, so companies which will facilitate decarbonization in different parts of the economy. So that includes clean energy, electric vehicles, also includes stuff like Zoom in terms of reducing the number of in-person travel meetings, and this kind of broader approach. So it just takes climate change as a theme, and decarbonization as also the theme, and how to achieve that. But then the other way we can look at it is in terms of, okay, right, so governments want to achieve net zero carbon emissions. Now, where are actually those emissions coming from? And then once you break that down, you can then kind of get a sense of different themes within the climate change theme. So 27% of global emissions come from electricity generation. So the very obvious answer is, well, a large chunk of government efforts will go towards decarbonizing electricity generation. And obviously that leads into the clean energy ETF, of which we have one, the S&P Global Clean Energy Select Index. As I mentioned, also the uranium miners ETF, which tracks a basket of uranium mining stocks, as well as some closed-end vehicles which have exposure to physical uranium. So that's how you tap into the 27% of global emissions being due to electricity generation. Then the other, say, 16% of greenhouse gas emissions come from transport. So then obviously the solution we're already seeing, we're kind of being rolled out, is the increased use of electric vehicles. And so then, that kind of gives the obvious theme is the transition away from the use of the combustion engine vehicle to the electric vehicle. But we didn't want to go and make an ETF, though, actually, which just kind of tracked Tesla and Chinese electric vehicle makers, or even some traditional car manufacturers, which obviously have invested heavily in the electric vehicle space. Instead, we decided, well, okay, let's think about it in terms of a bit more broader approach. Now, so when in the 20th century, we saw the revolution of personal car use, right? So we saw finally people start to actually have en masse personal cars. Now, that was only facilitated by the growth of a whole network of petrol stations or gas stations, depends where you are, roads, and basically it created its own economy around this, right? And this was the infrastructure underpinning it. Now, obviously, the electric vehicle theme we believe in, but at the same time, those stocks have produced such amount of attention, or they're in the kind of, they straddle the line where it's a traditional car manufacturer investing in it. So we didn't want that approach. We wanted instead to look at the infrastructure behind it. And obviously, so likewise with personal car use in the 20th century, the only way it actually gained, actually was able to happen was due to the creation of a network to keep them powered, i.e. petrol and gas stations. Likewise, if we do transition to a world of dominance of electric car use, it will only be possible with this kind of expansion of charging ports. And you can see kind of so these kind of ratio in terms of electric vehicles to public charge points. In China, obviously, as a leader in electric vehicle adoption, they've kept it relatively stable. In the US, the ratio shot up and you have too many electric vehicles compared to charge points. And so this is kind of, for us, kind of clear growth area and a clear way to pay this kind of decarbonisation of the 16% of emissions that come from transportation.
It's quite interesting. It's a really good example of, I think you mentioned, some of the ways you create these themes are sort of looking at public policy and looking at, what the market's looking for as well. And I guess this is the perfect example of those two things colliding and providing that tailwind.
Yeah, definitely. We obviously saw this kind of mass interest in Tesla and the other electric vehicle stocks. But that's kind of trying to create kind of a different approach to the theme so that you're not just going to, or the other approach was the kind of battery play, but we definitely wanted this more of a targeted approach. And I said it's 12 stocks as well, so it's very much a very concentrated pure play bet.
Yeah, no, it's absolutely fascinating. Really, really useful way to get that exposure rather than sort of an individual stock basis. What I thought, one of the observations I found really interesting in the research was, we hear a lot about ESG and some of the problems with investing on an ESG basis. But actually, I really like the idea that you can, by being so granular, by looking at these themes in this sort of granular detail, you can be really selective as an investor about what you get exposure to, and perhaps this is the way that ESG works, best of all, by actually having this thematic approach.
Well, yeah, definitely, and there's always this kind of tension in ESG of what should be excluded or not. Obviously, we can use ESG screens over the kind of thematic indices, but yeah, you kind of see this constant controversy and largely often confusion over actually what ESG means. So you see this kind of idea that kind of debate over what should or should not be excluded. As you saw, Tesla kicked out of the S&P screened ESG index earlier in the year. Now, from the pure kind of ESG screening perspective, it made sense, right? It was the reporting, the data wasn't there. They weren't reporting on the requirements they needed to maintain their position in the ESG screen index. On the other hand, it seems obviously a bit odd that the world's leader in electric vehicle use and development of batteries, which will play a key role in the adoption of electric vehicles, is not in an ESG screened index. But obviously, this is the kind of difference in terms of, that's kind of, I think it was a perfect example of us to make the point of, well, when we buy ESG screen broad market, an ETF that tracks the broad market with an ESG screen, or and it's fine to do, but you're kind of re-weighting, you're removing some stocks, but that's not quite the same as a kind of thematic approach where you say, okay, this is a vehicle to give you exposure to basically these world trading changing themes, the technology, the companies that are basically leading facilitating the transition to a net zero or lower carbon economy.
No, it's really an interesting concept as I say to how you play sort of green investing. I mean, there's a lot more to HANetf than green and energy. I mean, there's a lot of trends that you talk about in the research, from some software and tech trends and healthcare. Where can investors have a read of this?
Just head to hanetf.com. There'll be a tab for thematic periodic reviews. You can download our thematic review, our previous version as well, and also we do twice yearly our digital assets and crypto review.
Yeah, brilliant, Tom. It's been lovely talking to you, and thank you so much for your time.
Thank you.
Thanks.